Welcome to our Business Education and Research channel. In today's video, we will present detailed analysis about the interconnected dynamics of global tech markets through the lens of the NASDAQ Index and the Indian NIFTY IT Index. Today, we will uncover how changes in one of the world's leading tech indices can ripple through to impact another significant tech market. Join us as we dive deep into this transcontinental financial relationship, offering insights that can guide investors and enthusiasts in understanding these complex interdependencies. What drives NASDAQ? Technological advancements. The NASDAQ is particularly sensitive to technological innovations as it houses major technology and biotech companies whose stock prices are directly impacted by their R&D outcomes. For instance, when Silicon Valley giants like Apple or Google unveils a new technology or product, it is not only boosts their stock but also significantly impacts the overall index due to their large market caps. For example, in 2020, the launch of 5G technology by companies within NASDAQ spurred a rapid increase in the stock prices, which contributed to the overall bullish trend in the NASDAQ index. Economic indicators. The performance of NASDAQ is closely tied to US economic indicators such as GDP growth rates, employment statistics, and consumer spending data. Positive reports on these fronts typically boost investors' confidence, driving up stock prices within the index. The backbone of Nifty IT Index. Corporate earnings. The earnings and financial health of major IT companies in India, such as Infosys and TCS, are critical to the Nifty IT Index. Their quarterly earnings reports can lead to significant shifts in the index as these companies hold substantial weight within it. For example, in Q1 2021, Infosys reported higher than expected earnings, which led to a sharp rise in its stock price, positively impacting the overall Nifty IT index. Sectoral policies. Indian government policies targeting the IT sector, such as tax benefits for digital startups or software exports incentives, can greatly influence the index. Positive changes in these policies often lead to market optimism regarding IT stocks. For example, the Indian government's Digital India initiative, which included measures to improve internet infrastructure and increase digital literacy, resulted in heightened market sentiment and rise in the Nifty IT index. How global markets influence each other. Foreign investments. The NASDAQ's performance often influences foreign institutional investments into Indian IT stocks. A robust NASDAQ suggests a healthy tech sector, encouraging more FII inflows into Indian markets. For example, following a sustained upward trend in NASDAQ, there was a notable increase in foreign institutional investors' inflows into Indian IT sector in mid-2018, contributing to the strength of Nifty IT index. Exchange rates. Fluctuations in the US dollar and in the Indian rupees exchange rate can also play a significant role. A stronger dollar increases the rupee returns of dollar-denominated investments, attracting more investments into India when the NASDAQ performs well. For example, in periods when the dollar strengthened against the rupee simultaneously with gains in NASDAQ, there was a corresponding increase in the Indian IT stock prices as foreign investments surged. Analyzing past correlations. Trend analysis. Long-term data analysis reveals a significant correlation between the NASDAQ and the Nifty IT, often moving in tandem during global tech booms or bursts. For example, during the tech-driven market recovery post-2008 financial crisis, both NASDAQ and Nifty IT experienced a substantial growth rates, illustrating their correlated behavior. Volatility patterns. Both indices exhibit similar patterns of volatility in response to the global tech industry events or economic shifts, suggesting a mirroring effect. For example, the sharp decline in both NASDAQ and Nifty IT during initial COVID-19 market panics showcased how global crises can similarly impact correlated indices. Notable case studies of market influence. 2020 pandemic impact. The swift technological adoption during the pandemic, such as remote working and increased reliance on digital services, led to a rapid recovery of tech stocks in NASDAQ, which mirrored in the Nifty IT due to similar shifts in business operations across the globe. For example, the accelerated demand for cloud services and remote technologies in 2020 saw stocks like Zoom and Microsoft surge on NASDAQ, with parallel gains in Indian IT companies like Tech Mahindra. US-China trade war. The geopolitical tensions between the US and China affected American tech companies, with repercussions for Indian IT firms as global supply chains and trade partnerships were reevaluated. For example, as American companies began reducing their dependency on Chinese technological partners, Indian IT firms received more contracts, boosting in the Nifty IT as NASDAQ experienced volatility. Strategic moves for investors. Market timing. Understanding the correlation between NASDAQ and Nifty IT helps investors in timing their entry and exit in these markets, maximizing returns based on predicted movements in the US tech sector. For example, observing bullish trends in NASDAQ could be a signal for investors to increase their holdings in Nifty IT stocks before the effects ripple into the Indian market. Diversification. By investing in both NASDAQ and Nifty IT, investors can reduce risk as these markets can offset each other's movements under different global scenarios. For example, during the US interest rate hikes, while NASDAQ might underperform due to increased borrowing cost, Nifty IT could potentially gain from increased outsourcing to India, offering a balance to investors. What the future holds. Technological disruptions. The ongoing innovations in fields like artificial intelligence, quantum computing, and biotechnology are poised to be major growth drivers for tech indices globally, influencing NASDAQ and subsequently the Nifty IT. For example, the potential breakthrough in quantum computing could be revolutionize the tech industry, boosting NASDAQ stocks involved in these technological, with likely knock-on effects on Indian tech firms as they adapt to new global tech standards. Economic recoveries. As the global economy recovers from disruptions like the COVID-19 pandemic, increased consumer spending and business investments are likely to boost these tech sectors, benefiting both indices. For example, a resurgence in global travel and reopening of physical retail could spur a wave of technology upgrades, benefiting companies listed on NASDAQ and their Indian counterparts in Nifty IT. Considering the risk, regulatory changes. The regulatory landscape in the US, especially regarding the technology and data privacy, can have a significant impact on NASDAQ. Such changes often have a cascading effect on global tech markets, including Nifty IT. For example, the proposed US regulations on the data privacy and technological company operations could lead to reduced profitability for US tech giants, impacting their stock prices and the broader index, which in turn could affect investor sentiment towards Indian IT stocks. Geopolitical tensions. Geopolitical conflicts and the trade policies not only affect direct trade but also investor sentiment and market stability, impacting indices like NASDAQ and Nifty IT. For example, ongoing tensions between the US and other major economies often lead to increased market volatility, impacting global investment flows into tech stocks and influencing indices performance. Economic indicators to watch. US interest rates. The Federal Reserve's decisions on interest rates are crucial for tech stock performance. Increases in interest rates can lead to reduced investments in growth stocks like those in NASDAQ, affecting global market sentiments, including Nifty IT. For example, an increase in US interest rate typically leads to slowdown in investments in tech stocks due to higher borrowing costs, affecting NASDAQ and creating a ripple effect on Nifty IT. Indian IT spending. The level of spending within the Indian IT sector from both domestic and international sources is a direct indicator of how well Nifty IT will perform. For example, an uptrend in global outsourcing to India, coupled with increased domestic IT spending, due to governmental digital initiatives typically results in positive momentum for Nifty IT. Insights from market experts. Analyst forecast. Financial analysts and market experts often predict NASDAQ movements based on technological trends, which can be guide for anticipating changes in Nifty IT. For example, positive forecast for NASDAQ based on strong performance and innovations in US tech companies can indicate upcoming positive trends for Nifty IT, prompting preemptive investments by savvy investors. Advisory reports. Detailed advisory reports on global economic conditions and tech industry trends provide deeper insights that can help investors make informed decisions about when to invest in indices like NASDAQ and Nifty IT. For example, regular reports from financial advisory firms that track macroeconomic trends and tech developments can highlight potential investment opportunities in both NASDAQ and Nifty IT, advising on best times to increase or decrease holdings based on expected market movements. As we conclude our journey through the interconnected world of NASDAQ and Nifty IT, it is clear that the global tech landscape plays a pivotal role in shaping these indices. By staying informed about the factors that influence these markets, investors can strategically position themselves to capitalize on international trends, ensuring robust portfolio performance in the face of global economic fluctuations. Thank you for joining us, and we look forward to explore more financial insights in the future sessions. Thank you.